Hi guys, welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka. Here's my colleague Yatin Mota as well with me this afternoon, looking all glum because there was some bit of a weakness in the market today as well. It was a weekly expiry today, Yatin. We had thought that perhaps the Nifty will attempt to break out of that range.
Yeah,
That hasn't happened. The weakness has been a little more deeper today. Almost 100-point cut coming in on the Nifty, so 0.4% kind of a loss there. Sensex also down in excess of 200 points. Mid and small cap indices have also broken out of their gaining streak. 0.5% downtick in the mid cap index, small cap index down over 1%. Bank Nifty also under pressure, but what did well was the IT pack. Hit a fresh high today. Renewed bets of rate cut in the US next week. US CPI data came in largely in line with expectations, so that provided a fillip. And also, Yatin, Nasdaq
mm,
hit that 20,000 mark for
yeah,
the first time ever yesterday. So yes, sectorally, IT and metals were in the green. Rest of the sectors were in the red. In terms of individual movers, then quickly take a look at what those were. Adani Enterprises, Adani Ports under. I think those were the gainers rather. Bharti Airtel, Tech Mahindra, IndusInd, TCS. These are some of the gainers. On the flip side, what didn't do well was NTPC, some of the FMCG names like HUL, auto names like Hero Moto, Tata Motors, etc. And BPCL also down given the fact that crude prices are back above the $73 per barrel mark. But Yatin, stock specific action continues.
yeah. Stock specific action continues. Nandita, in fact, if you look at the mid cap end of the market, very active. We had a couple of block deals, including the likes of Newland Labs as well as Nuama. Both these block deals saw good volume traction also. But if you look at the broader end of the markets, the advance decline ratio was almost 1:2. Not bad,
Hmm.
but a slight bit of profit taking on the expiry days. What we saw today, almost 0.5% to 1% kind of decline for the mid and small cap index. But look at Adani Group stocks; they were all buzzing. Adani Green, Adani Power, we had Adani Enterprises. All of these stocks were buzzing in trade. However, what was not doing well is Nalco, Jubilant Foodworks, as well as Indus Towers. All of these stocks witnessing unwinding in the FNO segment. So, some bit of pressure coming in there. But look at stocks like Max Healthcare, Muthoot Finance, Coforge at multi-year highs and good traction seen in all of these stocks.
All right, stock specific action continues, and we will be taking stock of some of them. So let's break it down to individual stocks. And Yatin, the first one on my radar is Concor. This stock was under pressure today, given the fact that Goldman Sachs has a sell rating on the stock and has further cut the target price to 710 from 810. And this target cut implies another 17% downside from yesterday's close price. Now, earnings downside as well as market share loss, these are some of the concerns flagged off by Goldman Sachs when it comes to Concor. They see further downside risks to earnings going forward amid weak growth for rail, container traffic. And they've also said that maintaining market share could be a challenge for the company amid rising competition. Now, earnings downgrade cycle is likely to continue, according to Goldman Sachs. They pointed out that the volume growth of around 6% on a YY basis for the first half of FY25 looks pretty weak. In fact, the current run rate of the rail container traffic for October November is also very similar to the trend that has emerged in the first half of the current fiscal. And the management guidance of 18% in that light remains very ambitious, according to Goldman Sachs. Now, Concor had set a target of somewhere around 15% growth for its EXIM segment and 25% for the domestic segment in FY25. Now, to achieve this annual guidance, the company now needs to realize growth rates of 26% in EXIM and 35% in the domestic segment for second half. But given the kind of rail container traffic trends that are emerging, this could be out of reach for the company. That's what Goldman Sachs has pointed out. Looking at the stock performance, it's already shaved off for nearly 30% from record highs, and Goldman Sachs feels that there could be further downside pressure on the stock as well. The stock hasn't been able to do well, in tandem with the broader end of the markets, because some of the stocks have done phenomenally well, but this particular stock has given negative returns both on a YTD basis as well as 1 year basis. And even in the last 6 months, the stock has shaved off over 25% or thereabouts.
Yes, and today shares in fair bit of pressure given the fact that Goldman Sachs expects a slowdown. Not only that, we expect the market share also
Hmm.
to slightly get lower than what it is right now. So I think there are a couple of issues which are probably keeping the stock range bound for quite some time. But from Concor moving to steel sector, and this is one sector which was buzzing in trade. In general, there is a talk that in the budget or probably around that, stakeholders have been demanding that there could be a safeguard duty which could come in on steel products. Obviously, the government is still not made a decision, but if there is a safeguard duty which is probably higher, that could protect the domestic industry and benefit Indian steel players. Now, if you look at Morgan Stanley, they are overweight on GSPL and JSW Steel. Target on GSPL is 1200, and that for JSW Steel is close to 1150. Now, if you talk about stocks like Tata Steel, they are equal with the target of 160. Obviously, the green shoots for spreads and margins are seen in 2025, according to Morgan Stanley, and they say that the inventory destocking as well as improving demand should support steel prices in the medium term. Not only that, the pace of demand recovery in China is also an important factor which will impact the steel industry on a positive side, given the fact that China is working on a stimulus package and rate cuts quite aggressively. And obviously, select stocks will do well in the metal space for 2025, according to Morgan Stanley. And as I mentioned earlier, GSPL and JSW Steel, these are the two stocks which are on their buy radar.
That's true, Yatin. And metals as a pocket would be in focus, given the kind of announcements that have come out of China. But they have also said that they will maintain looser monetary policy
Correct.
and will come out with more fiscal
Hmm.
stimulus in FY in 2025. I beg your pardon. So yes, the metal pack will be in focus. Till now, all the stimulus measures that they have announced have really failed to enthuse,
Yeah.
so to say. But going forward, we'll have to watch out for what kind of measures they come out with. But staying with the metal pack, Nalco, that stock got hammered in today's session,
Correct.
Yatin, down 8% or so. And the reason behind this fall was very well explained by our colleague Nigel
Hmm.
in CNBC TV 18. Now he said that the move in Nalco share price is now very closely linked to the move seen in the prices of alumina. Now, Nalco is an alumina play because it sells the product in the open market. Prices of alumina have rallied to over $820 per ton recently from $600 per ton, but they have now cooled off to $700 per ton. So this is one reason. Another factor is the concern over demand. Now, Chinese aluminium smelters are finding the prices of alumina very high, even at $700 per ton. And a lot of aluminium smelters are shutting down due to lack of demand because of this. And this results in the demand for overall alumina going down. Aside of that, you also have Australian miner South 32 that has withdrawn its production guidance for its aluminium smelter in Mozambique. Of course, we know that there was far-reaching and widespread and deadly unrest in the country in the wake of the undisputed presidential elections. So because of that, they have withdrawn their guidance. Earlier, they had guided for 3.5 lakh tons of aluminium, which, if taken off the system, will result in demand going down as well. And speaking specifically for Nalco, they are also about to commission a 1 million ton per annum new alumina refinery next year. So how the demand situation pans out will be very crucial to watch for Nalco. But for now, things not looking very good. But analysts are expecting alumina prices to be higher than the historical averages going forward. So, prices going down as well as demand concerns, a combination of these factors weighing in on shares of Nalco. But of course, how the prices move and how things pan out in terms of Chinese smelters as well, will be key to watch.
Absolutely. And alumina prices have skyrocketed,
Hmm.
and now they're coming off from the
Yeah.
peaks from close to $800, now $700
Hmm.
for alumina. And alumina is one space which impacts Nalco the most, because
Yeah.
higher the alumina prices, better the
Yeah.
margins for Nalco. And the moment they come down, that impacts financials, and that is why
Hmm.
the reaction is such sharp on the shares of Nalco versus Vedanta or Hindalco.
That's correct, Yatin. So those were the stocks on our radar. We also have a few data points to watch out for, Yatin. CPI data will be coming out. It will be crucial because last time it was 6.2%, well above the RBI's comfort zone. This time around, it is expected to cool off a little to 5.5%. But food inflation is expected to remain elevated, and that's been one pain point. Aside of that, we also have IIP data, coming out for the month of October, and it is expected to be slightly better than what we saw in the month of September. So these are some of the data points to watch out for. But I think with that, we've come to the end of this edition of Closing Bell. From Yatin and me, thanks a lot for tuning in. Stay tuned to Moneycontrol for all your other news and updates.